Good morning. Welcome to our weekly professional insights, where we feature interviews with different financial professionals to help you, the viewer, coordinate financial teams and make the most of what you're doing financially. And our mission on these spotlights, you guys, is to create the synergy between financial professionals and how it amplifies your path to success. And this morning, we've got Brian Kerrigan, founder of Accelerating Business Growth. And I tease Brian because he is a recovering CPA and an attorney. So he's coming at this topic that we're going to talk about from a couple different angles. And before we get into it, make sure to hit that subscribe button, share this content. If you have any questions, leave them in the comments. We'll get to them when we can. But good morning, Brian. Thank you for being here.
Thank you, Mike. I appreciate it.
Yeah, I'm excited about this. There's a lot of things that you and I can cover, but really this morning, we're going to talk about maximizing the value of the business.
Right.
And I want to kind of just jump into this, Brian, on a very high level. Can you start off sharing some insights on how strategic planning impacts a business and the business growth?
Well, it's very difficult to be able to achieve your goals and objectives unless you at least have some sort of a basic plan. So, there's three elements to a basic strategic plan. You've got to really understand where you are now. You got to understand where you want to go. And then we help design the strategy part of how to get there.
And what do you think is the biggest sticking point with business owners and developing that plan? Is it that they don't do it? They don't do it adequately enough? They don't have a vision? What is that, like, one hurdle that they could get over this morning that could help them get that plan together?
They perceive that they don't have the time.
Interesting. We talked to a lot of professionals about that, Brian. And I mean, look, we could have multiple interviews on this idea of time, but how does a business owner get over that paradigm of I don't have time, when in reality they're creating the chaos that creates them not having any time?
Look at the three things in front of you right now. Figure out which one's going to drive the value of your business. If none of them drive the value of your business, work on your strategic plan.
Okay, so that's interesting. So let's go down that path real quick. You've got three things in front of you. You've got to hire somebody.
Yeah.
You've got accounts receivables that are not being paid, and you've got the toilet clogging.
Right.
Right. And I can take the third one off the list. I just said that for comedic relief, but you need to hire somebody and you've got people not paying you. How do you determine which one because both of those drive value?
In an hour, do you need to solve that problem in an hour, or can you sit down with me for an hour and go through how you would develop a preliminary strategic plan as to how to grow the value of your business? And at the end of the day, after 1 hour, your accounts receivable are still there and you still need to hire somebody, and you wouldn't have been able to hire them within that period of time.
Interesting. And so as a business owner, we've talked about this in our articles. You and I've shared information on LinkedIn about this, bringing key people on to delegate, right? Because we
Right,
talk about business owners being kind of owner-centric.
right.
So talk about some of the disadvantages of a business owner taking everything on and having to get out of that owner-centric mentality.
Their business has no value. No one is going to come in and buy that business because all of the institutional knowledge, all the relationships, all the inner workings of the company are in that individual business owner. So, as a buyer coming into that business, that's a high risk for me. And because it's such a high risk, the only way I'm going to buy that business is if the business owner wants to stay on for 3 years and have a significant earnout and significant escrows. And that doesn't work really well when you have a business owner who's just reached the point that they want to get out.
So with that though, Brian, so we go down this road. I'm a business owner. Everything is centered around me. I do everything, which is a completely separate topic and why you do not want to do that.
Mm-hmm.
But you come in as a business owner or a business buyer and you see this
Yeah.
and you just mentioned the risk. Even after 3 years, does it ever really work out? And I'm being a little facetious here, but does it ever really work out that you as the buyer take me out as the owner-centric kind of value of the business? Does that happen?
It has to happen, or else if I'm the buyer, I have to have a real sure plan as to how I'm going to be able to take that owner out of the business, or I'm either not going to buy the business, or I'm going to heavily discount the price I pay for the business.
And so then there's a misalignment between what the business owner thinks the business is worth and what the actual market is willing to pay for it.
Well, the funny thing is, if that business owner had focused, like we teach, on delegating non-essential tasks that don't create value and focusing on the things that are going to drive the value of the company, one of the things that they would have done is made themselves redundant.
But Brian, this is and for the viewers, whether live or recorded on YouTube, there is so much information, Brian, on this topic. Why aren't more business owners doing this?
I think they don't have time. They don't perceive that they have time to have the conversation. And the conversation takes about 15 minutes.
And what is that conversation?
It literally is, at the end of the day, if you want to drive value in your business, it needs to become far less dependent upon you. And we can help you do that.
But Brian, that ego, man, that ego gets in the way, right? This is my business. I started it. I have to do this. Nobody can do it like me. That's a big paradigm to get over.
And that's not the right client for us. That you have
Okay.
to have a client who has an open mind and is willing to say, this makes sense to me. I'm working 90 hours a week. I'm not making any more money than I've ever made. I just continue to work, 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 work. My family life is suffering. My employees are miserable. We're not achieving anything. That's the mindset that they have to have, and they have to be willing to change. If they're not willing to change, then they're not going to be a very good client for us.
And the understanding, the understanding that it's okay to let things go, but then also understand why you got into business in the first place. Because I think, to your point, Brian, there's a lot of business owners that have this grand vision, but nobody ever taught them how to execute on that vision. Do you find that to be true?
Oh yeah, I mean, entrepreneurs are entrepreneurs for a reason. Look at me; I can come up with 10, 12 different ideas every day. I have to figure out which ones I want to execute. Um, So, you got to figure out which ones you want to execute, and then you have to execute them well. I mean, even if you have a really good plan, you still have to execute that plan really well. And that's sort of another skill set that we end up teaching business owners is here's the plan, but we also need to stay involved in the implementation to monitor that for issues that come up and be able to fix those in real time instead of waiting a year and not having the ability to fix it for that particular year.
So if you have a client, they understand they need to make a change.
Yeah,
They understand that they're handcuffed to the business and really all they did was transfer a job into some ownership, but they still have a job. It's just more
right.
responsibilities.
Yeah.
But now that they've made that shift, how do you work with various tools to help them see the true value of their business and then from there move forward?
So one of the tools we use is called Value Builder,
Okay.
and it scores the company on 8 factors that go into a multiple. One of those is called Hub and Spoke. How dependent the business is on the business owner. I can actually take that tool and show them with their current profits and just changing the one variable for the business not being dependent upon them, how much value that can create in their business.
So how is that quantifiable?
Well, I'm not an algorithm guy. We'd have to talk to the people who design the algorithm. I can't. I can tell you the tool does pretty well in terms of valuation. It does pretty well in terms of scoring. It also gives me the ability to scenario plan different situations. So I can basically isolate variables.
Interesting. So one of the things that I see online, Brian, and I get hammered on LinkedIn constantly, is business growth, right? Everybody's
Yeah.
focused on business growth. It's always growth and sales and more this and more that. And making money isn't necessarily difficult, but keeping it is extremely difficult.
Yeah.
And so how does once so you've got this business owner, I've got to make a change. You have a baseline. Now the business is worth something. So now the business understands that he thinks it's worth multi-millions and really it's worth multi-hundred thousands. And now you've got these baselines. What are some of the tools that business owners can look to now help actually reduce the costs, not only within the business, but also on the tax side of things?
Yeah, so I mean, I can tell you that every company that I meet is leaking some costs, and
Absolutely.
I have people who work with me that do an analysis, and one of the nice things about the analysis is the savings from the analysis really pays for all the other consulting that needs to go into and around business growth. With respect to taxes, we run an annual tax mitigation program and a capital tax mitigation program. Each can save substantial, annual, you're saving taxes each year, which you can put back into the business to either grow the business or diversify away from the business. So you have assets outside the business as well. And then on the capital transaction basis, we have transactions that will reduce your net capital gain and on a deferred basis and effectively allow you to have more cash up front, which you can invest and effectively defer the taxes for a generation.
Because at the end of the day, Brian, I'm kind of on the inside of this conversation, so I'll make this very clear to the viewers. At the end of the day, we want to maximize the cash flow within the business
Yeah,
so that the owner can start to develop a nest egg and increase the value of the business to have a bigger exit. Is that what I'm hearing you say?
that is our exact model.
Okay. And there's obviously, Brian, there's a lot to go into that, right?
Yep.
I mean, there's the paradigm shift, there's the cost reduction, there's tax. I mean, there is a lot. And I'm going to ask this question because I know you know the answer to this because you're already doing this. You've been doing this for a long time. How important is it to have a complete comprehensive team working with the business owner to make this happen?
Let me give you the example. You as a financial planner are going to recommend an idea to the typical CPA. Well, let's assume for purposes of this conversation, it's a great idea. The typical CPA is going to say, and we'll call it a defined benefit plan.
Okay.
Let's just give it a name. So that client is going to go back to the CPA, and 99% of CPAs are going to say, "No, you can't do that. It's too good to be true." If you don't have everyone working on the same page, understanding the goals and objectives of the client, and meeting together on a periodic basis to discuss how we're going to accomplish those goals and get buy-in from everybody, you're going to have an extremely difficult time with advisors having different opinions.
And how do you get over that, Brian? I mean, that's I mean, so many people I talk to have that same reaction. I've got to talk to my CPA. I've got to do one. Well, I don't want to pick on CPAs that way. How do you, working with clients, overcome, we'll call it an objection,
Yeah,
overcome that objection to get the business owner to realize that, look, I'm not saying your CPA is not doing their job because they are, they're
right,
filing taxes.
right.
But how do you get them to understand that their CPA is not the be all end all?
They don't have to be, first of all. I mean, the simple answer is, Mike, when I'm going to present a proposal that needs involvement from multiple people, I present the proposal to all the people who have a stake in the outcome. if that's the CPA, if that's the business attorney, if that's the financial planner, let's all get on a call together. Let's raise the questions that are valid. Not no one can come into the room and say, "Well, we can't do that." That's not acceptable. The ground rules are that you have to explain why you can't do it, and then I get the opportunity to explain why that's wrong.
And Brian, there's a lot of business owners that may watch this and they may think, look, I'm not even ready to sell. And I've talked to friends of mine that own businesses and they're like, well, I'm never going to retire. And I don't mean to be morbid, but my response is, well, eventually you're going to pass.
Yeah.
And so how long in advance or how far in advance should a business owner start to consider these things, removing themselves as the owner-centric business, putting together all of these cost reductions and tax? How far in advance should somebody start this process before the sale date?
Now.
Now, now, it doesn't matter where they are in their life cycle, just start.
Yeah, your business always has to be ready for sale. You never know what's going to happen.
Okay. And what is it? The 3 Ds: death, divorce, disability. I think there's another one that
Yep.
we don't know what tomorrow's going to bring.
You know, again, I mean, like, just put that aside for a Mike. Why not build a valuable business?
True. Right. I mean, the statistics are staggering on how many businesses actually sell that go to market. And it's less than a third, I think.
Yeah.
And so if somebody's relying on their business to fund their retirement and they don't know what their business is worth, it's a pretty stark wake-up call to realize, oh my gosh, my baby's not the cutest baby on the planet.
One simple benefit of working with us is we do that value builder calculation will kick out a value that you can use in your financial plan that is accurate. And then it will also allow us to do scenarios which will show how that plan could be different if you achieve different markers.
Okay. Well, Brian, I just looked at the time here. I want to be cognizant of your time. We do like to keep these short and digestible, and I apologize. I kind of started going off on tangents here, but Brian, thank you so much for the time. We appreciate it. Like I said at the beginning, Brian's contact information is below. His website's down there. If you have any questions, please reach out to him. Let us know how we can help. We look forward to you being here next week. Until then, have a fantastic day. And Brian, thank you so much.
Thank you very much.